This week's tip involves a strategy Wall Street overlooks: purchasing performing seller finance notes. It isn't glamorous, it's not rocket science, it delivers. Let's break it down. Performing seller finance note is a mortgage created when a property seller acts as the lender. The buyer makes monthly payments to the seller, not a bank. These notes are often invisible to big funds. They're too niche, too scattered, and this is where you step in. So the first point I want to make is I want to source notes for motivated sellers. Okay? These are sellers who financed a property sale, and they often want cash now. They don't want payments stretched over 20 years. 1997, I bought a $60,000 note from a Florida retiree for about $45,000. It had 15 years left on it at about 8% interest, I believe. I collected $1,200 monthly for a decade. Now, where do you find these? Well, you want to start with real estate attorneys. Okay, now they handle owner finance closings. Title companies know sellers looking to cash out. Okay, there are online platforms that list notes, but I prefer developing my own leads by purchasing private note holder lists, which I can screen to a much greater degree. Okay, local real estate investor groups are also really good places to find these. Sellers network there. In 2002, I found a $40,000 note at a Tampa meetup that I had just decided to attend actually at the last minute. I paid $30,000, I earned 10% yield. You want to dig where others don't. Point number 2 is you want to evaluate the note's quality. Okay, a performing note hinges on a couple of things. 2 things really: the payer and the property. All right, check the borrower's payment history. Right, 6 months of on-time payments is my minimum. No gaps, no excuses. Verify the property's value with county tax records or a broker price opinion. Okay. In 2005, I passed on a note because the home's value was shaky, and it turned out that was a smart move. The property sold for the note's balance, less actually than the note's balance in 2008. Equity cushions will protect you. If the note is $50,000 and the property's worth $100,000, well, you're in a pretty good spot. Always run the numbers. Okay, use a financial calculator, okay, to confirm the yield. I use the HP 12C. It's an old school one, but it never fails. So point number 3 is negotiate the discount. Sellers of performing notes often accept 70 to 85 cents on the dollar per quick cash. Okay, for example, in 2019, I bought a $100,000 note for about $80,000. It paid 7% interest with 10 years left. My yield was over 9%, so you want to be clear on the terms. Use a note purchase agreement to avoid surprises. Don't get emotional. Stick to the math. In 2011, I overpaid $5,000 on a note because I liked the seller's story. And that was a rookie mistake, as it turned out. Even after 15 years, it cut my yield by 2%. Learn from my errors, negotiate firmly and ruthlessly, though. Not ruthlessly, but firmly, I should probably say. Okay? Point number 4, mitigate risks. Okay? Performing notes are not risk-free. Borrowers can lose jobs. Properties can drop in value. Natural disasters do happen sometimes. In 2001, a borrower in Ohio missed payments after a factory layoff. I offered a 6-month forbearance plan. He actually did resume paying, and I made 12% of the deal. Diversify to spread risk. Don't put all your capital in one note. Target notes with strong equity cushions. Okay? If the property is worth double the note's balance, you're safer. Insure the property against hazards if possible. Results may vary and losses are part of the game. In 1999, I lost $3,000 when a borrower vanished, just ghosted me, right? It stung, but I moved on. Point number 5, scale with systems. Okay, 1 note is a start. 10 notes are a business. Use financial software like to track payments and generate reports. Outsource title searches, okay, or payment verification to a virtual assistant. In 2023, I managed 20 notes with half the effort by automating. I hired a part-time assistant for $15 an hour, and he handled due diligence. Saved me 10 hours a week. Time is really your most valuable asset, so really you want to protect it. Set up alerts for late payments. Okay, review your portfolio quarterly. In 2015, I caught a borrower's missed payment early because of my system. I was able to fix it before it became a problem. So systems let you scale without losing sleep. So here's a story from 2004. I was at a Tampa investor conference. A hedge fund manager bragged about his $20 million bond portfolio. I mentioned a $25,000 seller finance note I bought for $18,000, and he called it, as I believe he worded it, small potatoes. Well, I collected $500 monthly for 8 years. Well, what about his bonds? Well, half of them tanked in the crash of 2007. Small deals done right beat big talk every time. The hedge fund guy's yacht, repossessed. Humility pays better than hubris. Okay? This strategy isn't a shortcut. You'll spend hours sourcing notes, checking records, negotiating deals. Some won't pan out, but yields of 8 to 12% are achievable when Wall Street's chasing sexier assets. You won't need a finance degree, just discipline and a calculator. Okay? Start small. Learn the ropes. Build your portfolio one note at a time. Okay? In 1998, I started with a single $10,000 note. By 2003, I had 15 notes generating $3,000 a month. So patience compounds faster than interest. There's a few practical tips before we wrap up. Always get a clean title report before buying. Hidden liens can kill your deal. Record your purchase with the county to secure your position. Work with a servicing company if you don't want to chase payments yourself. Costs about $20 per note monthly. Keep 10% of your capital in reserve for unexpected issues like legal fees or property repairs. Okay? I learned that in 2009 when a borrower's roof collapsed, and I had to front a couple $1,000s to protect my note. So preparation beats panic. Look, buying seller finance notes can be a solid strategy, but it's not a slam dunk. You could lose money. Trust me. I've taken hits like that $3,000 loss back in '99 when the borrower ghosted me. So my wins, like that $60,000 note I turned into steady cash flow, aren't guaranteed for everyone. Okay, your results will depend on the deals you find and the work you put in. Okay, and sometimes just plain luck. So before jumping in, do your homework, okay, and talk to a financial advisor or lawyer to make sure it's right for you. So do you want to dig deeper? Check out noteinvestors.com for more. There's a link down below in the description. You want to master this? Check out my mini course. It walks you through everything, finding, evaluating, and buying performing seller finance notes. It's practical, no fluff, built from 30 years in the trenches. Sign up today. Results may vary, but knowledge does not expire. So link down below in the description. See you next week with another tip.